Guys, welcome back. This is another episode. My name is Vlad. This is a DeFi Elite channel, and today we're going to talk about the best trade in this year. So I earned 100k in 40 days on BTC trade. And today I'm going to explain you what I did, how I did it, what are the risks was. And guys, there is no funny business. I will show all of the things on chain in transactions. No stupid screenshots like in other channels. So let's jump in. Today's agenda, we're going to talk about actually the story, how I made it. I will show you the social proofs, how I opened this position, what I did, what was the position, what was the tool. I will explain you how it exactly works, because this is a bit different than the perpetual futures. Is fully on-chain lending protocol actually called Lamalend from Michael Yegorov from Curve. And I will explain you the mechanics, how you could use it. We will see what else we're able to do with this tool, and we will see what are the risks could be there by using this tool. And in the end, I will show you my portfolio and where the money is sitting right now after this trade. So let's begin. I want to start with actually the social proofs of this, so how I made it, and the story and the proofs. First, in the very beginning, the BTC was around 75k. So I seated from here to here in BTC, and it was a drama about the tariffs and Trump, like everything gonna be very, very bad, and etc., etc. So the market believed in full recession, and I think like, okay, so if the market again believe that everyone gonna die, there's gonna be a pump, and the Trump is not gonna, he's not let actually market fell so much, because all of the people around him are trading, they are investors, and they could lose money, so he could lose power if they will lose money. Means that could be the bottom. So I took the trade here, and I've been outing here. Actually, I stopped and withdrew the money from the lending protocol at this point around 110.9. And I will show you where I made it. So I made it on Lamalend on Curve here. And how it was in the very beginning. So there was the first transaction around, let me see, this one, April. Around 7th of April, I made the loan with 75k. That's how I started. And in the end, I closed it at May 15, and that's how much I got, like 160k. So the story behind that, I dive deep into the research, like, okay, what could be there, what's around the global liquidity, what's around the decisions of the US with the market, with all of those MAGA things. And I realized that if we will fall actually under the 75k, we're gonna be, I think, for 6 months in a big recession, and they're going to be like fully capitalization. So I realized, okay, during those 6 months, I'm going to be able to earn and save the amount of the trade, the amount of the deposit, so around 75k, because I had a job those time. And I realized that it could be very good for me, especially because I didn't use perps, I used Lamalend. And in the Lamalend, what you could do, you could diversify your trade from short squeezes, while on the perpetual futures you're going to be liquidated instantly, and actually you could get the margin call. Here this is not possible, but I will explain you how and why very, very, very shortly. The general idea was that we can't fall down 75, and my safety, let's say safety belts, was that I had a job and a salary, and I will be able to recover these amounts if I'm going to lose it. But even if we will go to 60 or something, I told those time I could lose around half of the deposit, so maybe 30 or 35k from 75k at all. And then I realized that I did a lot of the calculations. I realized that I could open the trade, and I made it. So this is the screenshot from our crypto community, where I'm sharing all of the trades and all of my portfolio, stablecoin farming things. We also have the AI agent, which is helping us to find the best opportunities to farm stablecoins. We do have already money to farm stablecoins. And this, how it was look like. So this is our DGN capital, and this was the post here, 9th of April, what I explained here, like, hi guys, you may wonder what's happening with the portfolio because we have public portfolio, and this is not a financial advice, but when BTC was 75k, I pulled out BTC from Spark. The curve Lamalend was around 5x leverage. Liquidation price 64. Soft liquidation starts from 71. I will explain what means soft liquidation. And the value of collateral is 4 BTC. Borrow at 260k. So that was really, I think, the biggest borrowed amounts which I did in my trades in life. And then, so guys, let's see what's going to be. But I believe that if we will fall under 71, it's going to be the capitulation recession for the next 6 months. So that's my bet. Please don't do this at home. And logic that during the next 6 months, I will earn the value of the position and will buy BTC if it fell down under 71k. Or I will win. So love you, your Gen. And then what happened there? Then actually, first, we rise to around 90k. I got 100% P&A. After that, we rise to 100k, 100 and something, 105, and I got 224% P&A. The same debt, but the cost of the collateral was for BTC here, for BTC here. It's actually for BTC here, but the Bitcoin cost was raised, and actually I got a lot of money just in the 40 days. To confirm this, because you may say like, hey, you're showing me the screenshots. Anybody on the market showing the screenshots. Okay, let's go to Etherscan. That's Etherscan. That's the wallet where I've been doing a lot of things. Under this wallet, you could see this wallet from that the first transaction been made 94 days ago, 7 of April. So we sent 0.67 rapid Bitcoin to Lamalend to open this trade, and we borrowed 260,000 CRV-USD. Is actually which is representing our initial position here. 260 borrowed, and because 260 was borrowed, I've been using the leveraged long position because I came from only 75k in BTC. So 75 plus 260, it's 408 BTC and the price 75k. That's how it was started. And then after that, the last transaction here is where I close it, May 15. We could go to the chart actually and see like April 7 is somewhere here. Yeah, there is. And May is somewhere here. And I close it, then we could see that I've got 160k back. So there is, showing you from the wallet, that was firstly WBTC, it been sent April 7, then going back in CRV-USD, I've got 160,000 May 15. That's it. Don't believe me? Go to the block explorer, Etherscan, under this wallet, you can check everything. But you will ask me, like, where's the money right now? Okay. The thing is that in our community, we do have a portfolio reports, and I'm usually showing those portfolio reports here. And what was happened there? We actually started from 100k a year ago, then we grew up, then we fell, and then we grew up again because of this amazing trade actually. And that's how the portfolio looks like. That's the chart that I showed you. We started from 100k, being on 160, then fell down, then grew up. And all of this outperformed BTC here. And even though I will make another video because I bought a car from this long, from the lending protocol, and I will record another video to explain you what I did, and I actually got also the free car here. That was another amazing thing. So in general, that's how it was. That's the social proofs and on-chain proofs. And you could check our community here. You could check our reports, link down below. So let's go to the explanation how it works. That's actually a very interesting thing because we'll be using Lamalend. Lamalend, that's a type of lending protocol with a soft liquidation. You could find more information about the lending protocols on my channel. There's a video about the lending protocols. And in general, I will explain you a bit how all of the things works, but to dive deeper, you need to check my lecture for an hour. So, how it was? We will start with a leveraged loan. What means leveraged loan on the lending protocol? In the lending protocol, we usually have the supply assets and we have the borrow assets. So let's assume that the BTC will cost $100,000. One BTC, $100,000. We could borrow around 70k of CRV USD. We're able to borrow only less than we have in the collateral. Why? Because that the lending protocol will be in the default if we could borrow more. So it usually works in every bank or a lending protocol. Then what we could do, we could take this 70k and we could buy again BTC and put it into the collateral. So then we will have 1.7 BTC or 170k here, and our borrow going to be minus 140k. And then we could do it again also. So we could borrow again 70k and we could put it into the collateral. Here it's going to be 2.4 BTC or $240,000 minus our loan, our borrow. It could be here minus $140,000. So that's how it's gonna work. And it means you are creating a leveraged loan. So you are putting assets into the collateral, taking a loan, then adding your loan to the collateral, and you're gonna be able to borrow more, and you're doing it again, and you're doing it again. In the Lamalend, you could do this with the BTC up to 8x. So 8 times you could do this on the WBTC on the Lamalend. And what's actually that's what means leveraged loan. Then what means the soft liquidation and deliquidation process? The regular liquidation process is when you are when the price of the BTC is going down or the price of your borrowed amounts is going up, and the lending protocol should liquidate your collateral to pay your debt. That's the regular liquidation process. Soft liquidation and deliquidation process is a bit different. How it works is explained here. So what you could do as a lending protocol, if the price of the BTC will fall to 60k, you could sell the part of the collateral, for example 0.4 BTC, and repay the debt. It means if you're going to do this, your position, the position of your customer, is going to be 2 BTC, 120k, and the loan going to be 116k. It means actually that the position over collateralized, and that's okay. And then if the BTC will go up again in a price, you could do the deliquidation. Means you could borrow more as a lending protocol for your customer, and you can give back the collateral to the customer. So the lending protocol is doing this for you, and they're doing this soft liquidation process and deliquidation process. During this time, they are taking fees, but again, it's way more better than you will use the perpetual futures, because on the perpetual futures, you're just going to be liquidated. On Binance perpetual futures, on the hyperliquid perpetual futures, on every perpetual futures, you're just going to be liquidated till you hit the price of the liquidation. Here, you still have a gap where a soft liquidation going to works and deliquidation going to works back. But then, of course, you're going to be liquidated in the end. But before that, you will be able to earn the part of the loan, because you're going to be safe from the short squeeze. I'm going to show you how it works. So we're going to the Pure Finance, Lend, Ethereum markets, and we're going to BTC market. Here we want to do the leveraged loan. For example, we're starting with 1 BTC, and we want to do, let's say, 4 or 5x leverage. Means that we need to borrow around 400,000. So what we see here? Here we see that there's going to be 4.53x. Our expected value in collateral going to be 4.5 BTC, but we started with 1 BTC. Why? Because we're doing this leveraged loan. But our again, our borrow going to be 400k. And in this case, the health of our position going to be 16%. So means that our collateral still have more value than our borrow. And we're going to pay the borrow interest around 7 to 10%, because we're using this this loan. Let's say we're using those money It's same is going to work in the perpetual futures. That's called funding rate. Here is the interest rate. And the most important thing that we do have this price ranges from 102K to 89K. There is the place, there is the range where are the soft liquidation come into play. So if the price will fall here, this process which I explained to you come into play of the soft liquidation and deliquidation back. How it works, your collateral gonna be divided into the bonds. There is N, you could put here hide or adjust, there is N is the number of the bonds. If we will take 10 bonds, it means that our collateral gonna be divided into the 10 equal amounts which gonna be able to sell during the deliquidation and the liquidation process, or during the soft liquidation and the deliquidation process. So it's easy to explain, actually. Understand it like this. For example, we have 4.53 BTC and 10 bonds. So 4.53 divide to 10, there's around 0.45 BTC, which gonna be sold during the each bond when the price is going to this bond. That's it. And there is here, you're gonna see the bonds for the whole market. So for example, most of the users, they are put the a lot of like the major part of the capital during the bond 3 to bond -6. And it means that the people believe that the price not gonna fall than $66,000 per BTC, and this starts from 75. So in general, it shows us that most of the capital is sitting here between the last point, the last drop point, and around the 66. And they are not going to be liquidated if the price will go to this to those bonds. But after the final bond, you're going to be liquidated at all. So that's actually how it's going to work. So you could adjust these ranges. How we could adjust these ranges? For example, if we will borrow less, our soft liquidation range will be lower here, for example. And if we will put, for example, 4 bonds, four bonds is the minimum amount of bonds which we could put. So we could divide our collateral into the 4 bonds, which are going to be sold during the process of the soft liquidation. And here is our starting soft liquidation price and the final price 76, so from 80 to 76. But before that, everything going to be fine. Even during this process, everything going to be fine. In general, it's going to be not fine if the price will fall under the 76K, because there the real liquidation is coming to play and you could get nothing. You should take into account that's the risk, because with the high rewards, you can get the high risks. And what else you should know here, that yeah, like there's a bond range from -10 to -7, it's only 4 bonds. There is going to be the price range between those bonds, and that's mostly it. So that's how it works. You could play with it. You could, for example, borrow just 100K, and you could put more bonds, for example, like this. And your price of liquidation is going to be even 43K, starting from 73K. So this is a very safe setup, but still you are 2x leverage. I think it's amazing, and you're going to pay only like 7% APR here, because look, on the funding rate, you're going to pay way more. Yes. Then repay from collateral. So what I could show you one of my positions from actually the portfolio here, because we still have the long-term assets. Everything is explained in our community. And here we still have 2 longs on BTC and on ETH, but not on a big amount, only on 67 and 74K. And let me show it to you. So for example, that's one of the longs that I do have. And here how it works. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bonds around here, and 10 bonds. How it works, there is the collateral, 0.63 BTC here. And this collateral are divided equally between those bonds. So here there is 0.005791 BTC. and this collateral is divided between these bonds. The price of the bonds are different, means all of them going to be sold during the soft liquidation process, and again they're going to be bought from the collateral during the deliquidation process. So when collateral rise up, the lending protocol will take another one loan under this collateral and bought again and put it on collateral, and there is like a spiral up and a spiral down. So that's one of the loans, one of the leveraged loans. It already have 11% P&L. Actually, everything is described in our community. Again, I'm trying to do my best and to show how the things works and prove everything on chain. What we could do here, we could, for example, do the repayment from our collateral. Means if I don't have 55K right now to close this loan, I could repay it from collateral. So I could ask the lending protocol that please deduct from me from this amount, from my collateral, my borrow amount, and I could get in the end around 16K. Okay, that's one of the things. Then what else I could do? I could do myself the self-liquidation. If I have 55K, I could of course borrow more and create more leverage here and change my liquidation framework, let's say. And this is actually how all of the things worked here. Same I made with Ethereum. So there's one loan on BTC, and there is one loan on ETH. Actually, ETH performs way more better. Yes. So there is another 55K, 77K in the collateral, 27 ETH. If I repay it right now, I will get 22K. So there is our bonds. What else I want to show that during this trade, once we've been jumping to the soft liquidation frame, and I lost 0.5 ETH, like half of ETH, from 27 ETH. Why? Because during this process of swaps and doing the soft liquidation and deliquidation, you may lost some amount. That's not much, but of course it depends from what you're calculating for. From the whole collateral, that's not much, but from the initial amount that you provide, that's could be the loss, but is not actually something very dramatically changing your position, because in the perpetual futures you could lose everything. Here is a very, very good tool to do leveraged longs and do leveraged trades. So there is. Now you understand what is it, what is leveraged long, how the soft liquidation works, what you can do in the curve interface. What I could recommend you to do actually, to go to Lamalend and use it for $20 to understand the features and how you're gonna do this leveraged trades, how you're gonna close it. You will play with the bonds here, understand where is your liquidation range gonna be, and how all of the things gonna works. So this is very easy to actually, if you are understand how the crypto works in general. But after 1 hour of exploring, you will understand that if you even didn't know anything about the crypto, that's way more better than the perpetual futures, way more safety than the perpetual futures. Okay, so what else you could do with Lamalend? You could do leveraged loan, or you could do paid leveraged loan. How it gonna works? So we could go here, we could put one BTC, and then we could borrow 150K, which means that with number of bonds 10, our starting price in the soft liquidation will be 74K and 64 in the end. So what next can we do? Because we are paying 4, or here is going to be 7% APR on the 150K. Then what we want to do? We want to do paid leveraged loan. It means that we're going to earn during the sitting in this position setup. So what can we do? We could firstly do the leveraged loan on 150K. Then we could just borrow again more 100K. So totally is going to be 250K in borrow. Of course, we're going to change our liquidation ranges, but those 100K we could receive on the wallet, and we could go to, for example, Convex Finance, and put there into, let's say, some farming vault under a good APR like USDC, USDF, where actually the part of my money is sitting in, and everything again described in my community and our public portfolios. So what it means that on total 250k, you're gonna pay around 7% APR just for sitting there. So yearly is gonna be 17k, but in general, you're gonna be able to earn around 20k from just sitting in the farming pools with stablecoins. Means the difference 20k and 17k, you're gonna earn money, and it means you will set up the paid leverage it along. So there is actually only 2 points what you could do with the Lamalend. There is amazing ecosystem across the curve, and Lamalend, Convex, StakeDAO, Resupply. I will explain all of this in my community, link down below. And what I want to show that we do have the portfolio. I mentioned already a couple of times that being starting from 100k, jump into 160, then fell down and jump again to 178k. From this portfolio, actually, I bought a car with lending protocol, and I explain everything in details on those reports, with the different categories, with the different approximations, how it's going to work, if the BTC and the whole industry will grow and the whole industry will fail, what my frameworks, what my risks, everything here. All of those things are documented. You could check all of the wallets on chain, on all categories, and this is it. So I'm trying to be as clear as possible, and actually I'm very happy by doing these things, and I'm very happy to share with you that I made one of the greatest trades during this year. Year is not ended. Let's see what's going to be next. So thank you so much. Subscribe to my channel. You will know more about the DeFi and also traditional finance too. Thank you.